So here we are in the euro, and I tell you what, I mean, we were looking on this 826, but I'll be doggone. I wanted to buy it here at 818 because really I haven't been doing that much in the euro. I mean, pretty much my bread and butter nowadays is the crude oil. But I mean, obviously, you know, I stepped in yesterday right against these highs, and I'm glad I scalped it. You know, the only thing I do kind of regret is when it made a run back up here again. I sure wish I would have gone and turned around and shorted again for another, you know, like let's say 25 or 30 pips. So I'm kind of ticked off that I didn't do that, which I didn't. I just decided, you know, I'm taking the rest of the day off. And I saw it come back up here right by the highs, and I'm kind of ticked off that I didn't, you know, step in and, you know, take a run at it. We're at a key juncture here at this 984, and I think we're a little bit overdone. For those that really want to cowboy it up, they could, you know, they could fade it against here going into that NFP, because I think it's going to have a tough time mounting too much of a move here. Ahead of NFP, because always the concern is, wow, what if it comes in? We could easily dip 60 pips easily if we come in a good number. So for those that, like I said, really want to step in and say, you know, screw it, I think it's a good risk to reward. I'll take that. I'll take it, no problem. This would not be a bad area just to jump in just right before it, ahead of the NFP, in the sense that it's come so far so fast. One of the reasons I didn't stick around so long in that short, and I thought, wow, that was a pretty good short. You know, I was thinking about it here. I think this was like a 38%. Oh yeah, I think 919 was a 38%, and also we had this 924, which is really a key level. I think I remember I mentioned that on Inside Call. But I just mentioned this. You know, I just said, hey, look, 919 is a 38%, confluencing with the level of, I think it said 921.25. But I wouldn't insinuate and going to take any shorts or anything like that. Although I myself would consider, hey, you know, maybe even a scalp. And we're coming up against here, but I know that they could squeeze a little bit higher. Although I'm surprised that they were able to squeeze this high. I thought probably it'd probably take it up to maybe 948. Be honest with you, I almost took a jump at it then. But I think I was involved with the crude oil. And then all of a sudden, out of the blue sky, I see it rally up here, and I said, you know what, I'll take that short. And just shorted just a little bit, and we pulled back. We popped back up, and I'm kind of, like I said, regretting that I didn't step in and get back short again for at least another 25 pips. But I didn't. But like I said, one of the things about the euro, once it gets going in one direction, it can really get moving. Although I don't think it's one of those big breakout moves, you know, that we've seen in the past before. I just think that they're working them higher. But I got to give props to Blake. Very nice call. I'm sure he must have a lot of zeros. But like I said, we are a little bit stretched in here. I would have to think that the market would look to going in from a risk to reward, would look to back off ahead of the NFP. One thing that Euro's got going for it is, like I said, that you have to be cognizant about is that, and Blake's mentioned to that, is with gold. And we're right here at this key area in gold, right around the 1275. And so as long as gold, I don't think they've worked in tandem so well, because while gold was moving higher, the euro kept moving lower. But it is I would say it's mildly supportive. I don't think it's necessarily that big of a deal, because when gold was moving higher, the euro was still going into the toilet. So I don't think that that plays that much of a factor, although it's just a bit mildly supportive. So we'll take a look at it here on the 30-minute. You can see here that 976 is a 61% of this move that we referenced here, which is 826 to 1069 right here. I think, like I said, we're just, you know, now here's at 984 to 1137. It's a little bit more pronounced on the 30-minute. I just think that we've come a little bit too far too fast, and that's why I was stating, generally, I don't like to take a position ahead of a key report. But I'm just saying, for those that want to cowboy it up, I think this is a probably decent area just to go and take a short and look for this market to potentially back off at least 30 pips ahead of the NFP. If you say, you know what, screw it, I'll take it. You know, unless the NFP comes in weak, that's the only way it's going to rip up. I think that, I mean, obviously, 1028 I think is pretty key right in here, which also 1015 to 78%. But when you look in here, that's taking us in the middle of this range, and you got this ridge here. And when they fell from 1069, they came down to 1007, basically probably like 1005, 1003. We bounced back up and we ran out of gas right around 1030. But I've got the touches coming across here around 1028. So I think that that's realistically as far as it could possibly go. I'm just saying, if you were to say, you know what, I think it's really overdone here. Obviously, if the NFP came in real weak or something like that, that would change things. I just don't see that happening. I'm not necessarily expecting a move above 200, but I'll tell you what, it wouldn't surprise me to see something like 205 or something like that. And I'll tell you what, that would weigh on the euro, because then it would look like last month's fall to 151 was an anomaly. So you just have to look at in a bigger context. I don't think that it would mean that the euro would go down hardcore. What I think it would mean is then the euro would have to do more work down here around the 920 area. And then it would still have that upside bias move, but it would have a tougher time. And if you were to see that, then try to go on in advance. We've got things that are working. I'm saying this, and the euro's been falling, but now on the cusp of potential actions that the ECB will take, the euro is now starting to kind of ignore it. Although if you think about it, look how long we've been going down. So I don't think you have to take things into consideration. If you're saying, wow, look at it, it's rallying, it doesn't matter what the ECB does. I mean, come on, shake yourself, you're dreaming. Look how far we've fallen. You know what I mean? So if you're trying to say, I think that you can lean on it a little bit and say, on the cusp of the ECB meeting, the euro's starting to shirk off what potentially could happen. But please, make no crazy thoughts about this. We've had this fall, and this fall has just continued to fall in the complete toilet here. Now we're finally starting to make a stand, and it's one of, you think it was going to make a stand from here. We thought we'd make a stand from here. I mean, we finally did here at this 826. What I'm saying is the market, though, and I even thought here we would. Remember, we talked about this. We talked about this 964. That's what we were getting along here. That 964 area was a 61% of the move, blah, 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 and so on. And we're looking for 50 to 75 pip move that day. We got it. And then overall, we're looking for 100 to 100. We're looking for closer to around 150 move, 150 pip move. Well, we got 100, just barely. But I was really looking for a move up here. So that's what I'm saying, is that this market has continued to disappoint. So the idea that it's starting to rally now, I think that probably has a little bit more to do with positioning, and maybe the market, is thinking, wow, it's pushing hard, but don't go overboard. That's all I'm saying. Don't go overboard. I think it's still a good sell at just like I did yesterday. I think it's a good sell at extremes. You have to pick those extremes. One extreme today, I think, would be this 1028 area here. Doesn't mean you can't push a little bit higher. This would be pretty key right in here. If you look at this ridge right in here, I'll probably, just to make this a little bit more stand out, I think you have to look there. So you can see there's a lot of volume that's taking place in this area. So if we were to rally up here, I guess this pushes up to 1048. But anywhere here in this 1028, 1048, you've got some good volume. I think you'll see some pushback against this area. If it could even push up to that level. Not saying it can't, we'll have to see. I mean, we don't know until the numbers come out. Obviously, if we came up with something like, let's say, the wheels don't fall off the caboose, but let's say, we get something like 140, 139, then it looks like, not that the market's falling all apart. I'm talking about the employment market here in the U.S. It just means that the market's interpretation would be, now we've kind of slowed down into a pace. This is really good for a Goldilocks move. It's going to keep the Fed at bay probably till September. And that would obviously allow the dollar to go and sell. But I'm saying it'll have very sanguine environment. So, but that being said, anything over 200 is going to put the onus on a move around. I think there's the next one after that is June. We'll definitely put the Fed in that area. And then I think any rally that the euro could do would it doesn't mean I don't think it's going to stop it, but we would see a really good pushback from this area. Probably have to come back down to around 938, maybe even take it out here before it could potentially work higher. So we spent a lot of time here on the euro. Like I said, on Fridays we kind of talk a little bit of strategy, especially when we're going into the NFP. We need to go and take a break. We'll go and take a look at the dollar yen quickly. I thought they might be able to squeeze him up here into this 115. I think Blake was already short somewhere around here, so he's done okay. Although I guess he's probably looking for more. But the only thing is, I would caution y'all, just like I've said the same thing. And we know this 1430 has been key. Is that I would caution y'all is being careful with your shorts ahead of the BOJ. And we've talked about the market having an underlying bid tone. They've sold them off against this 1430 level, but you can see that this 1347, and I'm just saying is what people most likely appears are doing. We don't want to get too greedy unless you really think you're seeing a big move down here. Is that once again it has an underlying bid tone? Doesn't mean that when I say that, doesn't mean the market's taking off and going straight up north. It just means that underlying the market, these levels, you have a bid tone, and that's what you're seeing here. We make the move down to 1347, and we rally them up. We make the move down to 1347, they pop up a little bit. We make the move back down to 1347, they pop them up back up here closer to 14. So it's got that underlying bid tone in the sense that the market, I wouldn't expect for the market to fall rally just like this, and then fall some more. It's just that it's got that underlying bid tone. So as we come down this lower level, this 1347, and they can overshoot it, which they have, people are willing to step in and cover them here, just like obviously here, and here. We'll have to see how the NFP goes, but I'm just saying I think you have to be a little bit careful going into the, ahead of the BOJ, which I think is next Thursday, I believe. Obviously, and I will say this: it's you would think with the SPOOs, which just ticked up to 1994, they're back at 1992, and I've talked to you, or we've shared that the importance of 1992. And I said that yesterday. Doesn't mean the market can't scoot up to 1996. Obviously, I didn't even think the market would be at this level right at the NFP. I thought the market would probably be trading like around 1982, and that we could assault the 1992 going into the NFP, maybe even take it up to 1996. Well, we're already hitting that area late yesterday, and we're still pushing against it. So we'll take a look at the S&P, but this 1992 is a pretty key area. Obviously, like I said it before, if we were to get something like 218,000 jobs, this market looks like, it's still going steady, the economy. That's going to allow the SPOOs to even press up higher. Doesn't mean that in that particular circumstance, we'd probably go up to like, I don't know, like we'll take a look at the chart, but probably up to like 2018. Doesn't mean that eventually we'll pull back to 1992 for support. But I'm saying is that's going to go on and flip it even more positive if we were to get something north of 200, like really closer to like 220. And we still have the euro staying pretty strong. Pedro that's his problem, okay? Nobody else has a problem, okay? Anyway, it's time to go on in. One moment. Okay, it's time to go on break. We're seeing the euro still kind of press them up here, and I guess they're going to try and spook them. But like I said, once again, if someone's saying, you know, they're going to go on and cowboy it up, you could just go on and take it on, I believe. I just think it's overdone here. It doesn't mean that the market just can't pull back going to that NFP. And that, you know, I haven't seen that lately, but we would lots of times would see this with the euro. They try to push them one way or the other and then come back in. Right before the NFP, let's say, you know, sometimes that move might not even take place until, let's say, the last 10 minutes or so before the NFP, but then you see the market really come right back in. So we'll have to see how that goes and plays out. Let's see. Okay, everybody, and welcome back to the European crossover. So let's just go and take a quick look at the dollar CAD. And the dollar CAD remains still close to these lows as crude oil remains relatively close to its highs. Had a little bit of a hammer here. It's probably coincided about the same time that crude got above $35 and started to lose that $35. But the fortunes of the Canadian dollar are certainly going to be based on what happens with the crude oil market. And we're still nipping up here against this $35, pretty close to it. So we have to be careful to see how it was to finish out the week. I know that the funds have really been buying the Brent, which has been supportive, obviously, for the West Texas Intermediate, WTI. And I did see a story that the funds are starting to come in also with the WTI. So we have to see. I mean, I think the people are, you still have heavy shorts, I believe, in this market. I think they're probably crossing their fingers hoping that we don't get a foothold above 35. There's some key levels there around the 35.50 area. But the market's still trying to figure out what it wants to do. You still get this feeling that we're just kind of hanging around up here in the crude oil market. But I think we have to go in and get through past today. I think it's a tricky time at the moment trying to go in and trade crude. Because if you're going to take a position, I think you have to have pretty wide stops at this time. I think you can do okay, and you've seen that despite whether you were long or short. But you had to have fairly wide stops because it kind of pressed it. And the market just doesn't know what it really wants to do. We'll have to see which way they want to go in and break them here. I mean, at this point now, I'd almost question what we could do on the upside, only because we came up to 35.17, we backed off. We came up here and tripped some stops above here, and we backed up. But we haven't backed off that much. Have to see if they can press it up higher. You can see here we've got some key confluence right here around this 35.50. You've got 35.54, which is a 38%. The move down here, 26.05, to the high that we had, which really was $51, but it's actually $50.90 to be specific. So that's be 38%. And I thought they'd be able to trip this up here yesterday. but I thought it would fade, but they only jumped it up here to what it's like 35.32, something like that. And then 35.75 is a 78% of 26.05 to the most recent high, which was 38.39. So it almost seems like the market, and if they want to blow them higher, I almost think that this area would have been the key area. Right here would have been a key reactionary point, 35.86. But all they did was they triggered the stops here just above the 35.17 and brought them back in. And the market is just kind of sitting here, although I guess we could take a look at this, which I rarely ever look at daily charts. But if we take a look at this on a daily, you can see you've got a bit of it. I wouldn't call it that much of a long-legged doji, but you've got these dojis coming across here. So the market's in an area of indecision at this point. Take a look on how it looks on a weekly. You can see how this engulfed the prior body. So that gave us that upside move. And we got this doji here, so the market wouldn't show you what we wanted to do. The key is going to be whether we can close above 34.68 for the week. And the market's right there. So if we can get a close above 34.68, that would also take out this high right here. So the market will still look good as long as we can close above 33.76 on the weekly. The game is still in play, and then it obviously really turns it positive and allows for a higher move if we can close above 34.69. That will allow this market to go higher and test these upper boundaries. So I think that your key right here is defend 33.74 on a weekly, keeps the game in play, move above 34.69. A weekly close above 34.69 opens up a test for much higher prices. If that's the case, then we'll probably go on and move towards this, definitely 36.50. That would definitely be in play for next week if we were to close above well, yeah, definitely 34.81. If we can close above 34.81, that opens up the door for 36.51 and probably an eventual move up here towards 37.22. $34.21 continues to remain the key level that I talked about. Yeah, it was when a lot of people got fooled on this market the other day after releasing a report, and I tweeted out when we closed above 34.21, that opened up the door for a move to 35.17, which we saw to the tick. So, and then I also later tweeted was 34.21 a close below that on a 2-hour, then just it doesn't turn it all bearish, it just neutralizes this move. Although since we spent so much time here, that would make them a close below 34.21 would have the market probably come down to high 33.57 for a test, which is basically 33.56. If we were to lose 34.21, it neutralizes it, and then we'll have to work lower to find value, and 33.56 would probably be it right there. Obviously, the jury's still out on crude oil, and we're going to have to see how this plays out. for now, I think, I mean, it's pretty obvious, but the market is just trading within these ranges here. Until it figures out what it wants to go and do. And here's your levels on the upside. What you try and do is, what I try and do is, listen, say, when I figure that the market's running out of momentum, and based on how the price or price structure is, then there's a chance to say at this point, depending on how it would be playing out, I would take a whack at it against 36.17 or whatever. So these different levels, when they come in, I'd have to probably pull it way back. It gives me an indication what the market was doing at that time. And then I just try and take that to determine what is my risk and how much higher. So if it's 36.17, I'm taking short. I now got that risk up to around 36.44. And that's the way I use this, because they're not, you can see here they're not as spread out. The market's respect now. But if you were thinking, well, it's just one level after another. But it helps me assess what my risk is when I come in and if I take the other side. Or if the market's breaking higher, how much further can it move? If it's done a lot of work here, it's probably not going to stop at 35.50. We talked about that 35.81. And then you got the pretty big risk up to 36.17. So if it were to blow past this, I know this is an area where I could step in. I'd be able to hit the stops above 36. So that's the way I use, here you're seeing just a plethora of levels. You don't see it as pronounced down here, but you see all these levels coming in here. It kind of gives me an idea of where I want to go on and take on a trade and what's the risk on having a trade, or if the market's taking off, where are key levels where it can go to. It's a little bit different, but we talked about this when we defended at 34.21. I said that opens up the door for 35.17, and then we hit that to the tick and then backed off. So it's basically the way I use it is just to go on and not to forecast, but to where the market may want to go on and target. So let's just go and take a look at the SPOOs. I guess when we're looking at the SPOOs, we'll take a look at gold. And we talked about this level. We went over this level about, was it 2 days or 3 days ago? And I was looking at the 2 hour, and I had this marked off from way back when, and I mentioned about this 1275. Actually, it's 1274.20, and you can see that the market made it to 1275.90. Now we're trading at 1269. So a nice sell-off. I mean, a $5 pullback. Now the moves have been huge, but a nice pullback from that level. And we talked about this. I think about a week and a half ago, I talked about 1283, I think it was, and when I pulled this to it, we addressed this earlier in the week. I think it was either Monday or Tuesday, and I said, hey, look, if they break them higher, it's this level they want to go to, which is right here at 1274. 1274.50 is actually the level. And they made it to 1275.90, and we backed off a good $4 from that level. From the high, we backed off $6. Oh, here we go. I was looking for the 30-minute. So you can see where it's been marked off here on the 30-minute. These levels go back from eons and eons ago. But you can see we've seen a decent pullback. I mean, they want to hit those stops above 1275, and then the market went and pull back. And I haven't been doing anything with gold in quite some time. It's a hot market to trade. We talked about that from a day trading standpoint, but the way this market is running and going at pretty good clips, at least if I was trading it, I don't even think I'd be looking at very many other markets because the ranges that you're getting. But it's still a little bit of a tricky market. I'm saying is I some people, I know Fat Fingers is pretty good, only trades during or they only look at RTH, regular trading hours. I try and look at the whole thing, and but like I said, the only thing is that you have to do some wide ranges, unless maybe you're just looking at it on a 5-minute chart. That's not a bad way to go and go with it. But sometimes the market will just sit here and consolidate like it's done here, and then just turns around and rips people's heads off. And then, now it's not really consolidated as much. We've had a nice pullback. But that's the thing that'll drive me a little bit crazy is we get a big move, and then we just sit there and consolidate. Then we drop them, we consolidate a little bit, we rip them back up, we consolidate, drop them back down, and that's what I'm saying, that kind of moves drive me crazy. So I just haven't done anything other than, like I said, that we discussed is that we were looking for this 1274 area as a target. And that was from way back on the 2-hour chart. So hopefully some of y'all were able to go on and take advantage of that move. I haven't done anything with gold. So getting back here on the SPOOs, we talked about this yesterday, and I even tweeted out a chart on the Inside Call 2 days prior that 1992, I talked to a gentleman the day prior to that. We were talking about 86.5. And I said, hey, look, that's a good level. It's a key level, 86.5. But when I went back on the 2-hour, I sent him a DM and said, hey, look. And we actually made it to the 86.5. Said, look, I'm looking at this 92.50. It's huge. I know I discussed that with Blake yesterday. I said 92.50 is huge. All the touches here, resistance. You see that here, resistance, 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 support, 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 then now resistance. And that 1992 also equates to 61% of 1802 to 2110. Once again, like I said, if we were to get, something on the non-farm payrolls, like around 220, this market is going to 1875, straight up. That's the target that they'd be going for, is 1875, which is an old bias pivot. That's why I have it marked off in red. So doesn't mean we couldn't make it up to 22.5. Doesn't mean the market may have found a little bit of trouble at 15.25. But if we get something like 220, my thoughts are we go straight up to 1875. I think that it shows that there's a lot more behind the economy. Now, when you make it up here, though, at least that's the way I would think that they would perceive it initially. But then when you make it up here, then they're probably going to think, wait a minute, doesn't that kind of front end the Fed, front load them to a probable move in June? So then maybe we'll have to come back down to 86.25. To find some support, or maybe a little bit, eventually a little bit lower. But like I said, something like 220, which would be a good positive surprise, I think we take them up to 18.75. And then that little area is going to be between 15.25 and 22.50, but I think we go to 18.75 because that looks like, we've got a real solid economy. But then, like I said, they'll weigh in the concerns of a potential rate hike, which I think would push us to June. But unless the numbers continue to keep on going strong, I'm getting way ahead of myself. But even then, I think they might be hard-pressed to even raise in June, if June's the next meeting. If there was a June and July, then I think that there would be a chance they would take that in July. But we have to see how things are going. But right now, I think that's the way you want to trade it as far as perceptions.